Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome back to the Bitcoin Bulletin. Today we're diving into a hot topic that's been on everyone's mind. Will Bitcoin fall back below $100,000? Well, as you might expect from our name, we've got the latest updates and expert analysis on this very question. So, let's start with some context. The price of Bitcoin has been on a wild ride lately, with some ups and downs that have left even the most seasoned traders scratching their heads. Just last month, it reached an all-time high of $112,000, but then plummeted back down to around $108,000. But what's behind this trend? According to James Butterfill, head of research at CoinShares, the answer lies in technical analysis. Bitcoin has pushed past its 200, 50, and 30-day moving averages and has significantly outperformed all other asset classes, he says. That's a pretty convincing argument for those who think Bitcoin is here to stay. On the other hand, not everyone agrees that $100,000 is a firm support level for Bitcoin. Adrian Fritz, head of research at 21 Shares, thinks it's still a bit too early to tell. While the breakout confirmed bullish momentum and market strength, it remains a battleground in the near term, particularly under the influence of broader macroeconomic uncertainty, he explains. So what drives that macroeconomic uncertainty? Well, according to Daval Silenskite, director of digital assets research at WisdomTree, it's all about investor behavior. We need to see if this milestone triggers widespread profit-taking, she says, and the answer so far is no. In fact, it looks like $100,000 has become a new support level for Bitcoin. But what about those who think Bitcoin could serve as a store of value and a hedge against expansionary fiscal and monetary policies? Well, Silenskite agrees that there's strong institutional demand for crypto investments. Physical ETPs continue to attract strong inflows, nearly $5 billion in April, signaling continued institutional acceptance, she says. And what about the macro tailwinds driving Bitcoin's latest rally? Silenskite points to renewed expectations of U.S. rate cuts, persistent inflation concerns, and rising fiscal stress as key drivers. Renewed expectations of U.S. rate cuts, persistent inflation concerns, and rising fiscal stress have strengthened Bitcoin's appeal as a hedge against monetary instability and long-term sovereign risk, she explains. But there are also risks to consider. According to Fritz, one major concern is the possibility of a sharp reversal in the currently favorable political stance toward digital assets in the U.S. And what about inflation? Well, Silenskite warns that if central banks pivot more hawkishly than expected, it could trigger sharp corrections in crypto markets. So where does this leave us? Well, according to Fritz, we may see Bitcoin's price stabilize at around $100,000 mark in the short term, barring any new market shocks. But even without those shocks, risks persist. The macro landscape is fragile, with tariff disputes, ballooning global debt, and rising yields posing threats, he says. That's all for today's Bitcoin Bulletin. Thanks for joining us on this journey into the world of cryptocurrency. Don't forget to follow us on social media for the latest updates and expert analysis. And as always, stay informed, but don't invest without doing your own research.